In this video, we're going to talk about the child tax credit and the advanced child tax credit and how to get a bigger tax refund. So by the end of this video, you're going to understand how to get more out of the child tax credit, get a bigger tax refund by lowering your federal income taxes. Also, uncovering other credits to, again, put more money back in your pocket. Now, I'm also going to go over two examples. Somebody earning a lower income and somebody earning a higher income, just so you can really understand how the advanced child tax credit, the child tax credit, how all this stuff works. I would like to take a minute to thank the sponsor of this video, Aura, the new standard in digital security. Aura provides identity theft and fraud protection for your finances, personal information, and family. Easy to understand, simple to set up, and all in one place. And as you would expect with an identity theft protection, you're gonna get the online account monitoring, your personal information, and your social security monitoring. And one of the services that I love the most, financial and credit fraud protection, which covers everything from credit monitoring to 401k and investment account monitoring. Because it's your money, you worked hard for it, and you need to protect it. So visit aura.com/Travis for 50% off. And I'm also gonna talk about the repayment protection, because I know a lot of people are concerned that they might have to pay a portion of it back. So we're really gonna take this thing from A to Z and hopefully answer your questions. But like always, if you have questions, let me know in the comments down below. So I drew out a ton of different pages for us to go through, just so you can really understand it. And I want to start at the beginning. So we're going to quickly talk about the child tax credit and the advanced child tax credit, and then we'll work our way into those thresholds, the income limits, and what you can do to put more money back in your pocket, and of course, get a bigger tax refund. So let me go ahead and pull this up on the screen so we can look at this together. And right here, we have a basic overview of the child tax credit and the advanced child tax credit. So it's broken up for the advanced child tax credit into two age groups. And the first one I have over here is from 6 through age 17. And this is as of December 31st of 2021. So whatever the age of your child on that date is the dates that you're going to use. There is no prorating it. If your child turned 18 in September or October or November, they don't qualify. It is whatever the age was on December 31st of 2021. So from 6 to 17, the advanced child tax credit, even though you can qualify for $250 per month for 6 months, it's still $1,000. And the other portion is that $2,000, and that is the child tax credit. So the original child tax credit, $2,000, the additional money is $1,000, bringing that total to $3,000. And under the age of 6, so 5 and younger, that is gonna be $1,600 for the advanced portion of the child tax credit, $2,000 for the original child tax credit, bringing it to $3,600. Now, what I am not gonna cover in this video is the part that you already got, the $250 or the $300. That's just gonna be an amount that you already have in your bank account or not. So that is a calculation that is already done and over with, so there's no reason to bring it up, but this is how it's gonna be broken down moving forward. So I did wanna touch upon that. So these are the age groups and how the different denominations actually work. The next thing I wanna go over are the phase outs and the income protection. So, or the repayment protection. So let me go ahead and bring this back up on the screen. And I'm gonna take myself off the screen just so you can see this whole thing here. So for married filing jointly, head of household, and single, for full repayment protection. So what this means is if you're earning married filing jointly $60,000 or less for your modified adjusted gross income, then no matter what happens, if you have a non-qualifying child, you do not have to pay it back. So if on a previous tax return, you had a qualifying child, and on 2021, you did not, well, guess what? You don't have to pay it back, and that's it. It's just repayment protection on a non-qualifying child. So let's go ahead and continue, and going to head of household at $50,000 and then singles at $40,000. Now, if it's above these amounts, you could still potentially qualify. So all these numbers that we're gonna go through are literally double. It makes the math a little bit easier. They're literally double. So the phase out is gonna go from right here, from 60,000 to 120,000 for married filing jointly. So that means, again, a non-qualifying child, and you're still earning, say, $100,000, then you don't have to pay all of it back. Some of it, but not all of it. Same thing for head of household, that goes from 50 to 100,000, and for singles, that goes from 40 to 80,000. And I'm gonna go through some of this math in just a second, but these are the income limits for the advanced child tax credit that I've gone over in other videos extensively, but it will still be an example or part of an example in this video. $150,000 or less for married filing jointly, you're gonna qualify for the full $3,000 or $3,600. For head of household, it's at $112,500, and for singles, it's $75,000 or less. That doesn't mean over this amount that you don't qualify for anything. It just begins to phase out. Now, the reason that there are no phase out ranges after that is because it does also depend on how many children you have. So if you have more than one, then the phase out will go over a much greater amount. And it's the same thing for the child tax credit, which is $400,000 for married filing jointly, or the $200,000. So let's take a look at that again. So it's $400,000 for married filing jointly, head of household at $200,000, and singles at $200,000. So what this really means is that somebody that's earning $400,000 doesn't qualify for the full amount as married filing jointly, but they do qualify for the full $2,000. And from this amount going forward, it begins to get reduced. It's the same math as going from 150,000 for married filing jointly and beyond. And it's 200,000 for the head of household HOH and 200,000 for singles. So now let's go over the repayment protection phase out. So I've already written all this stuff out just so we can get through these videos quickly, and you can really just get what you're probably looking for. How do I figure this out? Now, I'm gonna take a second before we pull this up on the screen and explain the importance of going through this math right now before you go into things like TurboTax or any online software or TaxSlay or anything like that. It's so important. And even if you have an accountant or a CPA or an enrolled agent that's doing this stuff for you, that's perfectly fine. You should still know this stuff in advance. The reason being is that if you're aware of these numbers, I'm gonna show you that you're gonna be able to plan and put more money back in your pocket than you might have realized. And this, to me, is what financial planning is really all about, and understanding your financial situation to really make the most of it. Because the earlier you know this stuff, you can start to plan for it and really put money away and save on taxes, and probably why you clicked on this video to get a bigger tax refund. So let's go ahead and take a look at this example. And I will put myself on the screen this time. Here we go. Repayment protection phase out. So the amount over divided by the threshold. So the amount over in the example that I'm going to show you is the amount over 60,000. Let me bring this chart right back really quickly. So the amount over married filing jointly to get full protection, the amount over 60,000. It's this phase out that we're dealing with. So in the example, we're earning $75,000 as married filing jointly, and I want to show you what it looks like as we move through this phase out. So, married filing jointly, 60,000 is the threshold, and the amount over that, 75,000 minus 60,000, 15,000. So it's 15,000 divided by 60,000. Again, amount over divided by the threshold. Amount over divided by the threshold. That's 0.25 or 25%. We're gonna do the inverse of that. So simply, if you're not a mathematician, all you need to do, 1 minus 0.25, which is this number right here, equals 0.75 or 75%. Now, the maximum amount of the repayment protection for non-qualifying child is $2,000. So 2,000 times 0.75 is $1,500 protection. So if you've received $2,000, you will not have to repay $1,500. The other $500, you will, but you probably didn't get $2,000. So that's how the math is going to work. So that is how it works out. So that is the repayment protection. So hopefully that was clear enough. All you need to do is go back and look at the formula and plug in your numbers to figure out whether or not you're actually gonna have to pay any of it back. And hopefully you don't have to pay much of it back. But even if you're at this point and you're saying to yourself, oh, I have to pay this back, I don't really want to pay it back, keep watching the video. I'm going to show you a way around it so you can get even more quote unquote protection or a bigger tax refund. Not necessarily protection, but I'm going to show you how you can reduce your taxes so you don't have to write that check. So let's continue with our examples. And on the next one, I'm going to go over a income earner, and this will start to show you exactly what we need to take a look at. So let me move this over so I can possibly still be in this video. Maybe not. All right, we'll just go through it. Married filing jointly with 2 non-qualifying children, dependents. 62,000 is our example in this one. So we're earning a modified adjusted gross income of 62,000. Now in this example, look what I'm doing. 62, we're beginning to phase out, okay? Phase out. We're over this amount. We're at 60,000. I'm not gonna get the full amount because I'm in the phase out. So here, what do I say? Take $2,000 and put it into a traditional IRA. Now you can put into any type of pre-tax retirement account. I'm just using a traditional IRA in this example. You might not qualify for one. There might be another strategy that we might need to use in order to get you to take $2,000 and put it into a retirement plan. Just an example. That brings us down to $60,000. That means we're gonna get the full protection. So here's how this breaks down, okay? $133 more in the child tax credit protection. So that phase out would bring us down or increase the amount that you can get to $133. Doesn't seem like a lot. Maybe it does, maybe it doesn't. $240 on taxes. How did I figure that out? You look at your tax bracket as married filing jointly, and you're gonna find that it's at 12%. So that's gonna be $240. And I believe that's 12%, right? Married filing jointly, yeah, 12%. So we have $240 on, because we put this in pre-tax, $2,000. So we're gonna continue. Then you have the savers credit. The savers credit at this rate is 10% of whatever you put into that retirement account up to $2,000. So that's gonna be $200. That works out to $573 back in your pocket because you saved $2,000. So in this example, we were able to get even more payment protection. We were able to lower our federal income taxes and take advantage of the savers credit. So let's go ahead and pull up on the screen. If I can pull this up so I can show you what the savers credit looks like. I've done videos on this before, but I do want to show you what this looks like with the 2021 savers credit. And at $66,000, it phases completely out. 10% is what I want to take a look at. 10%, we're right in the middle here. So we're at 62. We brought it down to 60,000. That's 10% of your contribution. In this example, it was $2,000. That's $200. So you can see how this works for married filing jointly. And if you're different filing status, here you go. So you can take a look at the screen really quickly and you can see exactly what it would take to get even more. You can get up to a 50% credit. Now, yes, your income has to be significantly lower, but that means if you put $2,000, that the IRS is going to give you a $1,000 tax credit. So basically, it's like a match. It's like a company match. So even if you don't have any of this stuff and you can put money and you're at these thresholds, savers credit, plus the federal income tax rates, it's just going to be a win-win-win for you. So a lot of wins in there. So something to consider that you should take a look at with the savers credit. Now, I said in the beginning of the video that we're also going to go over a higher income example. So in this example, I want to go from $175,000 for married filing jointly. And let's go over this again. Make sure it's up on the screen. Let me take myself off there just so we can see this clearly. So married filing jointly, we have 2 kids under 6. So $175,000 is our modified adjusted gross income. And in this example, we're gonna save a little bit more. We're gonna save $6,000 into our traditional IRA, which is gonna bring us down to $169,000. that means going from $175 to $169. That goes from a child tax credit of $5,950 to $6,250, which right here is $300 more on the child tax credit. But look at this. On taxes, we reduced it by $1,364, a total savings of $1,664. So we've put $1,664 more dollars in your pocket just by saving $6,000. And you have that $6,000 that's now hopefully getting invested and now working for you. So you're going to be significantly better off. So put more money into your retirement plans as much as possible. Hopefully this encourages you to do so. But this is basically how you should be looking at the child tax credit. Not, I just get the child tax credit, I just fill out the form and move on. If you take a little time to plan and figure out how much you were due, how much you could qualify for, and how much your income is, what's available to you after that? Could you put more money into a retirement plan? Can you move some things around? And there's a lot of different planning techniques that you can use. The list is basically endless. But if you think you have a particular scenario that you have a question about, let me know in the comments down below, because I'd be happy to do it. I do a lot of these videos based on questions and emails and phone calls that people give me on all of this stuff. And I say, you know what? That's a great idea. Let me go ahead and illustrate it on the channel. And I'd be happy to do it for you. If you just let me know in the comments down below what your particular situation is and whether or not you can actually save. Because if we can take that, we can figure out what the best course of action is for you to put more money back in your pocket, get a bigger tax refund. And in this example, you're saving more money for retirement, crushing your taxes and getting more tax credits, opening up other doors for yourself, and hopefully just doing better for yourself financially. So let me know in the comments down below if this has helped, if you have any questions, and we'll see you on the next one.